Hello again, this is Alex with MasterChartsTrading.com, and this is market recap of Friday, December 1st, 2017. The holiday season is upon us, so do practice gratitude and charity as before. Stocks experience some bouts of volatility. We'll look at some of the big NASDAQ names that are under pressure. I think this may be due to some of the Bitcoin leveraged plays like Nvidia and Overstock. I'll look at the position in Overstock I had. Pretty wild. Tweeted out this Bitcoin massacre. We're gonna see a future start trading on CME. Bitcoin futures on December 18th. This is regulated futures. This is a big deal. So I wonder if we'll talk about that. Anyways, we'll look at junk bonds. I'm a little cautious now that I see possible Eurobond breakout. Look at some of the Forex universe, Euro versus Euro, British pound versus dollar, and US dollar versus Japanese yen. Gold also looks precarious and possibly options play. We'll look at oil and finally wrap up with natural gas. Okay, let's look at S&P 500 ETF SPY. This is a daily chart. Yesterday on Thursday we had all-time highs. Today we had a partial gap down. Very big candlestick here, large amplitude candlestick. So at a certain point throughout the day, actually I'll look at it 5 minute. So today's action, 5-minute chart, attempted breakout higher. We got shorted here at 11 o'clock and then bottomed out at 11:30 and then basically rose from there. So this action looks like a hammer candlestick. A lot of support, apparently a lot of buying up here at 261, 62, 62, 60, all of those levels here. It's quite overextended, I would say, and additionally there's volume is really large for S&P. Let me show it to you on a weekly. So there's that volume from this week. It's definitely above average volume. Notice that it was also at fresh all-time highs, and there is a little bit of selling, so you can see that the close was not next to the high. So a pullback would not surprise me at all. We're definitely overdue. So here is SPY using the TradingView interface. Looks a little bit different, but gist of the matter is the same. Important thing is here I got my proprietary indicators here. It's a custom script. Basically, you can get this at MasterCharts Trading. I can add you in manually, so you can use it on TradingView. But I'm looking at this level here at 258.45. While that level, so let me look at it at StockCharts website. So here's that same level. I marked it there. First support. The first support before was like back at 254. Again, why? Because last week that level was around 254. It was like right there. But looks like now we're having a breakout to fresh highs. I think we need to see a consolidation. So a consolidation at this point. Could be just sideways trading, could be a pullback. I mean, this kind of spikes usually get retested. The lows will get most likely retested. It's just a very volatile looking candle. So again, I would not be surprised if we see a pullback. We're definitely overextended. But at the same time, we're quite strong. So S&P 500 and stocks throughout the world really are still in a bull market, and I wouldn't contemplate shorting them just yet. Divergences, again, I wanted to point out, here's a divergence from October into November. The stock itself, rather S&P 500 is going higher, higher and higher, but the RSI, for example, is making lower lows. So what do you do with that information? I ignore them now. I used to worry about these divergences, and I was used to worry about this overbought, oversold. Now I sort of ignore those things. Excuse me, and I concentrate on price itself. Price itself is bullish. The volume is a little bit concerning, so we will see. I think the pullback is coming, and I think the opportunity is there for the bears. The bears do need to take initiative. So here's QQQ, gap area here at around November, well, end of October rather. There's this big gap here after Amazon reported. I think this is also a support level, so we can look at the same chart using the elite indicators that you can get again at MasterCharts Trading. Just ask me how to get them. Eventually I'll automate the whole thing, but not yet. So here's that support level at 149.90, 150 basically for QQQ. So there's that level that's coming in right there. I think the pullback to that level is something of a normal thing. Some commentators are already mentioning that this volume is very large, and in general NASDAQ does this thing. You can see this very large volume, and you would think, oh wow, this is a top-in volume. Look at the size of this volume here in June. And then you notice that that's actually not the top-end volume, that's the bottom-end volume. So is this already the bottom-end volume, and then we'll just continue higher? I feel like some sort of consolidation is required. Notice that here back in June of this year we had consolidation before fresh highs were made, and I don't think we're done consolidating yet. I mean, this was a very strong move basically from even July of last year, just straight shot higher. IWM, Russell 2000, similar picture as the S&P, big spike, big amplitude candle today. Notice where it spiked into the 50-day moving average. If we look at the elite indicators, we can do IWM and elite indicators, same thing. Big spike, notice it spiked below the green line, so I would be basically entering at one of the lines for a quick trade. Right now you can see that things are changing, things are in flux. Whereas, for example, here back in October, you can see a straight lines of this indicator, so there was very little change. And then before this also there was pretty little change, fresh breakout, consolidation. Now it looks like we're in the middle of this fresh breakout, and consolidation is just beginning. So I think we will need to work some of this overbought conditions off that just began here. I pointed out this November dip, and then I pointed out lots of hollow candlesticks in this area. So I think that was a good thing, and it obviously resolved in a bullish manner. Weekly charts don't really say anything different. Junk bonds. Here are the junk bonds on a daily time frame. Okay, it looks like the data was adjusted because data looked different. Looked a little bit different on junk bonds. So let me show it same chart using TradingView interface. So notice that there's a drop here, but there is no gap on stock charts. I do believe that this has to do with dividends being paid out. I think today was the dividend payout date. So doesn't look too bad. junk bonds. This chart includes dividends. This chart does not include dividends. So again, notice that the range is narrowing. Notice how this yellow line and green line are coming closer together versus this area where you can see it was like just straight. There was no changes here back until mid-November, but now we're kind of again in flux. So we need to see a resolution of some sort, and I don't think it has yet occurred. So we had a swoon here for junk bonds, a strong rally with a gap. I think we may want to retest this gap now again. So junk bonds correlate strongly to the stock market. You can see correlation coefficient, and if junk bonds decide to move lower, I think stock market will also come under pressure. Weekly time frame junk bonds, no, I don't see too many bearish patterns on this chart. On the previous chart from stock charts, here's the trading view chart of junk bonds using the indicators that they or the overlays. Notice how narrow the range is as of late. Notice how close the yellow and the green lines to one another, whereas before they were quite much more wider separated. So I think we're seeing a narrowing range currently, and we could see a breakout either way. We could see a breakout higher or a breakout lower. Actually, it's much more obvious on the weekly charts here. So I think if we see a break, like a close below, say, well, currently 36.55, like this red line, or maybe on 36.24, this could reverse the entire trend into the downtrend. Vice versa, for now, I'm keeping a bullish bias on junk bonds, and we could easily see fresh highs above the green line here. So overall, indices are doing quite nicely. I actually started taking some money off the table as of late, especially in some of the more volatile names that I have, like for example Guess, and I have Costco, Gap. So I had some retail names. I took some money off the table, but overall I think the stocks are bullish, but are in need of some sort of a pause before a fresh push higher commences. Okay, so a little bit unusual section today. This has to do with some of the stocks that are leveraged to Bitcoin, and if you are a Bitcoin, I don't know, fan, or you're interested in this new technology, here's a chart of Bitcoin on Bitfinex, one of the new exchanges that propped up recently. Now, the important feature of this chart is actually not that at all, but I wanted to show a couple of articles from Seeking Alpha. Here's one by Ian Bezic. Excellent analysis, by the way, highly recommended. Here he mentions that basically the reason why it was more difficult to short Bitcoin in the past is because there was no futures available, and like no regulated futures, so to speak, in the United States. I heard that in Europe they are already being traded, but I think that this is the big moment of truth for Bitcoin, and up until now it was relatively difficult to short Bitcoin, and now we're seeing actual Bitcoin contract for the future. So if you're interested, read this article. I would highly recommend it. It's a great article, and it explains why he thinks that we could see a significant drop in Bitcoin. I'm a technician. In other words, I look at the technical chart patterns. I don't really look at the fundamentals of Bitcoin. But here's a chart, and here's the spike that I'm referring to. So this, I mean, it's an enormous spike to, let me see, like 11,441, and it is possible that this is as high as it's gonna go for now. So I don't know. Obviously, nobody knows. But here you can see a daily chart with my indicators on them. You can see that here, if you just bind at the green line right there, like you have a couple of successful trades right there, 1 and 2. You can just buy the green line for a pop higher. Now, me personally, I kind of like to see a drop to the blue line, which is a good support. So this is like a very solid support, and usually bullish charts, bullish securities will bottom out around the blue line here. Like for example, back in September of this year, I noticed Bitcoin bottomed out right at the blue line and then rallied strongly. So a correction of this magnitude from the current levels to 7,500 would be a normal retracement for pretty much any normal instrument. But Bitcoin was not exactly normal because it was traded on exchanges that were not certified. Now that the futures are coming, I think the more certification and all that will be required. So I personally, excuse me, tweeted out a couple of tweets. Here's one: Bitcoin massacre coming, futures to start trading. So very dramatic headline. The reality is probably somewhere much different. So here's that tweet. Maybe Bitcoin is headed for 7,500. Here's another idea published. The massacre about to unfold. So will we get to 7,500? I have no idea. But for normal securities, this is a normal retracement. So a couple of plays that are tied to Bitcoin are NVIDIA because they produce, I believe, some processor units, I think, for the Bitcoin miners. I honestly don't know, but it actually makes no difference because I'm only looking at the technical. So for NVIDIA, you can see, for example, here are the previous good points of entry. So, for example, you could buy at the green line. But now that I feel like the Bitcoin may correct further, perhaps NVIDIA will also correct to around 170. Here's another play that I personally did, and this is Overstock. And this is one of those initial coin offerings, and I had no idea about this. I knew nothing about this particular stock. It just came up on my scan. So here is Overstock, and here's my position. It came up on my scan somewhere around September. I bought it just for, I bought my normal position in Overstock here at on the 26th of September. All of a sudden, it just went completely bananas. So I took some profits. Took another a little bit more profits, but then it just took off, and at a certain point, like up here, I was up to like 160% on my remainder, and then I can see it started to collapse, and you can see that they were related to Bitcoin, and I think the Overstock issued some kind of a initial coin offering. Anyways, so I went ahead and I closed my position here, which was a good thing because the next 2 days we had a continuation of this collapse. And so overall, it was a decent transaction with a 46% profit. And I think I'm going to stay out of this one because I don't like the way it's just collapsing through support. So you got, like, look how it blew through this blue line. I mean, it could bottom here, but we'll see. So the point I'm trying to make is now that Bitcoin, and actually the gentleman Ian Bizek also made this point quite clearly, and I highly recommend this article, that basically since now big players are going to come into the arena, the volumes, I mean, the volumes of Bitcoin have been pretty, big and good, but I think once the futures are here, we'll see even bigger volumes, and finally a easier way to short Bitcoin. Currently, it's relatively complicated to go short Bitcoin. Everything is just going up. So overall, maybe Bitcoin is headed for a decent sized correction. Okay, let's continue to bonds. I already covered the junk bonds before, but I wanted to cover TLT in a little bit more detail. So TLT is a 20 plus year treasury bond fund. This chart includes dividends, is adjusted for dividends. Now, I was sort of indecisive about where this is going. Couple of things I think are pushing me into a bullish direction for TLT, because I wasn't sure if we're gonna go break 121 or we're going to break 128. Now I kind of want to say that we are going to break 128 and continue higher. One of the reasons for that is this chart. So this is Eurobond. Technically here, up to actually today, I would probably short this chart. And actually, if you shorted this chart right there at the blue line, you could have had a nice profit if you have access to CFDs. Americans unfortunately do not have access to CFDs. Very convenient product. But here's today's action, and actually I published this as well as an idea. Suddenly I grow cautious about stocks, and this is a possible options play. So you can see that bond, and you notice how it closed a little bit higher. The close was a little bit higher than before, than I just showed you. Okay, I'll do this bond. So today, on Friday, the close was barely above this blue line. Notice 163.52. The blue line is 163.51. So technically, we did close above it. So this gives a little bit of more ammo to the bulls. I mean, if this is a true breakout, then we should start buying it, bond. And that's, one of the options is to go towards overhead resistance, or you could play it the other way and hope for the stock to go towards support. Either one is quite possible, so you could do a options play that way. But what I'm trying to say here is that possibility of a bullish breakout now is stronger, and especially here is TLT on a daily time frame, also adjusted for dividends. So just looking at this chart, notice this. I think this is a breakout here from November. Kind of moved sideways, retested this blue line right there in September, mid-September, and then yet again just now in November, and then we kind of gapped above it, and I like that we put in a fresh high here. So maybe this is a beginning stage of a breakout for TLT, and maybe we'll continue higher from here. Let me look at the weekly chart for TLT and see if there is anything else. Yes, so here's the weekly TLT chart. Notice how currently the price is exactly between this green and blue lines, and it's really kind of pushing higher towards the breakout. So that is why I'm more leaning more bullish currently. And notice really nice volume this week as well. So it's possible that bonds are actually going to go higher from here. Okay, let's move on to the Forex universe. Here's US dollar on a daily time frame. This chart kind of hard to read, so let me show you the chart from trading view. It's a little bit more. I think I'll be moving more towards trading view charts. They're a little bit more interactive, more convenient. Also, you could send me private mail at MasterCharts on TradingView if you're looking for these indicators. So I mentioned that basically I think dollar is in a downtrend. So now we could short it either at the yellow line or anywhere between the yellow and the red line, basically. Sometimes it doesn't get to the red line because it's a really good, strong resistance up here. See how it never even got to the red line. And now we kind of broke it below the yellow, and actually we could potentially short it right now. So I think I made a post here, dollar at resistance, and could be shorted. I'm not sure what McCain rally they were referring to, because I don't see any rally, I see a drop. So the dollar, it looks to be in a downtrend, could break down below this 2017 lows easily. Here's euro on a daily time frame, euro versus US dollar. I'm sorry, on the weekly time frame. Pretty straightforward breakout, throwback, surge kind of thing. Here's euro on a weekly time frame, and pretty clear, like, notice that here's that breakout I'm referring to from April, May, or rather from May of this year, and then it just went straight higher. But I notice sometimes that, like, if it breaks above this blue line, it just goes. So sometimes a breakout play is just that. You just buy like a buy stop above the line, above the blue line. But currently we're looking, so that it looks like a pullback and then a surge. So like I said, the bottoming actions come usually somewhere between the green and blue line, and this is, by the way, weekly chart and 52-week setting. So overall I would be probably looking to buy euro futures or euro US dollar, or I definitely don't want to sell it. Here's British pound, same thing. Looks like this is a weekly chart, pretty wild there. Let me show you GBP USD on a daily time frame, and I'm not making this up. Notice where we had a really nice bottom right there on the 6th of October. It came exactly to this blue line after, you know, we got a surge, then pullback. So if you just set a limit buy order at the blue line, that's pretty much all you needed. Again, you can get this at MasterCharts Trading or send me a private mail on TradingView. I'm at MasterCharts. Then finally, USD versus Japanese yen. US dollar versus Japanese yen. I actually went ahead and I shorted it myself, and I'll go over it. So I shorted it like yesterday evening on the 30th of November. It kind of went in my favor because during the day there was this big drop here, but then it really kind of went against me, and I'm like, I don't want to chance it, because over the weekend, so I went ahead and I closed this position. I'll show you a little video later on. So I don't want to hold it over the weekend and worry that's going to gap against me. So I have a little bit of a profit and I closed it, and maybe I'll short it again. But I think the important thing is that this is a breakdown right there on 22nd of November, and then I think this particular pair should be shorted currently. Alright, so as a follow-up, today is Friday, December 1st, 2017, and I wanted to follow up on this US dollar versus Japanese yen trade that I just did. Now I was expecting a little bit more follow through, so it did not materialize obviously as I wanted it to go. During the day, I was very hopeful that we will close somewhere around 111.8. I want to close below the previous day's lows. It did not occur, and this is what concerned me. There was a hammer-like candlestick, so even though I entered at the highs basically, so I had a little bit of a profit, so I made, a tiny little profit here. I went ahead and I closed it because today is Friday and I don't want it gapping on me, against me on Monday or other Sunday night. So I decided to go ahead and close it. I can always short it again, but right now price action is still possibly somewhat bullish. And yeah, let's stay nimble, so to speak. So right now I have a profit. If I held it over the weekend, who knows what's going to happen? Who knows what's going to happen in the future? It's better to preserve your capital. All right, let's move on to gold. Gold's been really all over the place. Here's gold futures. So far, like back in September, October, even parts of November, not really too many problems here, because notice that it was at the bottom of the blue line here, a nice surge here, like a really vigorous kind of surge, but then it kind of unraveled again, pushed back, and it just basically traded sideways, really traded nowhere. So where is this going? Could be a great opportunity. Also, it could break below. In fact, I published another little idea, and there's a little idea: potential options play on weekly chart. Again, you can find my information, Master Charts. Send me a private mail, and I can get you those indicators. So the way this would work, I don't know which way it's gonna go, but it's pretty much equally possible. It will go either higher or lower. So it could go towards 1322, or it could go, gold can go towards 1213. Either way, it's kind of like finally poised to go either way. It's just really difficult to say which way. Now, my personal bias is to the upside, but it's not as strong as even a little bit recently. So yeah, kind of choppy, confusing action. GLD choppy, confusing action on the weekly time frame. Just basically sideways action, but possibly down from here. The problem is that also right now the gold futures and the dollar are kind of not really collaborating. If the dollar is dropping, gold should be rising, but it's not. So that's what kind of bothers me. Additionally, GDX also has been all over the place. There's resistance up here at 25 bucks. Here's weekly, it's a little bit more clear. You can see pretty clear resistance on 1, 2, 3 occasions. It came to that area and then was rejected. And as of late, notice that we have possible rising channel on weekly chart here in September, October. Another possible bear flag consolidation that's been going on for a few weeks. And if this bear consolidation breaks to the downside, that could be quite bad for GDX. So here is GDX on a daily time frame using my indicators again, and here it looked great. Wow, look at this, a breakout in September. It's a great, probably a good buying opportunity here for it to go higher. It didn't go higher, it basically consolidated sideways, and notice there's this close below this blue line back in October, and now this blue line seems to be acting as resistance. Notice several attempts to go higher and it failed. So I think that if we get to 21.25 or like 21 bucks, I think it's game over for GDX. We could see a significant drop from here. GDX has been weakening consistently. Notice gap here, attempted rally. This is a bearish candlestick. So GDX has been weakening somewhat. Let me find the market breadth, see if it tells us anything. Moving averages again, conversion, and most likely we're gonna see a bear cross. Yeah, there's a little bit of a negative divergence here, possibly. Yeah, and then we see new lows being made within the index. Very few bullish percent index buy signals, 25 only. So GDX is at a very precarious space right now. And again, if we see a break below 21, we could see just a collapse of gold miners. So be careful out there with the gold. Let's move on to oil. Now, this chart of weekly continuous contract for West Texas Intermediate, that's one of the reasons why I've been kind of moving away from stock charts and more towards trading view, is because it's kind of difficult to visualize sometimes on stock charts what I'm trying to make a point about rather. And in fact, here is a good example why sometimes I confuse myself by looking at different sites and getting different information from different sites. So here's light crude oil futures, and technically, you know, if we're going to go with my system, you know, I see a breakout here on the 20th of September above this blue line, so this should signify to me that I should be going long, and in fact I should have been basically buying here. Instead, for some odd reason, I'm still trying to figure out why, I decided to short oil right there, and in fact I did short it, and I made a decent, or rather it went in my favor, but then right here it basically reversed and I was forced to cover it at a no loss, just a slight, very small profit. So sometimes this bias, you know, to trade one way or the other is so overwhelming that we just completely ignore everything else. And this does happen to me occasionally too. Like for example, this short, I'm still having trouble justifying it. I should have been going long here because of this nice move. So notice that there was a several ideas published. For example, here's one, first level to watch, and it came down, see right there. I published the idea on 9th of November. I said, okay, it's gonna probably come down to this level, came down exactly to this level. And you know, if you bought up here, it was a nice move higher. So again, we're coming down, probably again coming down to this level. First support around 56 bucks. Even stronger support at 52 bucks. Now, where is this going? Are they going to bring more rigs online? You know, there's so many questions with this. For now, it looks like the price is going higher, so let's just go with that. XLE, once again, I wanted to point out that I am still not seeing a breakout on energy, although it is really trying. So notice that I published a whole bunch of them. So here's a time to short back in October. Bullish resolution now more likely. It did go that way. So far I'm still not seeing a breakout above this 72.21 level, and once I see a breakout there, I will have no problem buying XLE and some of the other oil related components. Natural gas really confounded me. This chart really hurts my eyes. I'm basically avoiding it. Weekly, you could potentially play it with options. Let me see, NG1 exclamation point. So very confusing chart, I think. Namely because of this spike, and I tweeted to CME and nobody really responded, and nobody really knows what's going on. Many opinions on where this is going. I was not sure if the data was adjusted for this candle from the 27th of October. That means that I do see a close here below this yellow line, so we should be shorting natural gas. But what if this data point was not adjusted? Because I don't see the spike anywhere else. For example, I can do in gas, which is a CFD compound. Contract for difference that you can trade outside the United States. This spike is simply not there, so maybe this is still potentially bullish chart, and I'm basically confused, and I don't want to trade it because of this confusion. One day I'm sure this will somehow be resolved. Maybe they will answer my tweets and I'll say, is this candle adjusted? If this candle is adjusted, then we should be shorting this chart. That's it for this week's recap. Please navigate to MasterChartsTrading.com and sign up for a free 1-month trial. You can get 1 month, 6 months, 12 months. Now I have currently 2 services that are rolled into one. So the basic service, you get all of the ETFs that we trade. With Elite, you also get those indicators that I just showed, and we also trade stocks like Qualcomm, Microsoft, just regular good old stocks. So sign up. Like I said, several really good trades as of late. Market has been really strong, and I think it probably will be set to continue higher, possibly after a pause. Again, if you have any questions, please send them in, and thanks for watching. Have another great trading week. Bye bye.